Have you ever stared at a stock chart and just felt lost? Like you were trying to read tea leaves or something? Yeah, you are definitely not alone. For more than a century, traders have been on this almost mythic quest to find an edge, to find some kind of pattern in all that noise. So today, we're going to go on that journey. We're starting with the simple stuff, the moving average, and we're going all the way to a formula that claims it can decode the literal cosmic vibration of the market. It's going to get weird, so let's jump right in. And we have to start with this quote from the legendary and, let's be real, deeply mysterious trader W.D. Gann. You see, Gann was convinced that markets weren't random at all. He believed they were like a grand symphony, governed by these unbreakable laws of math and geometry. This idea that price and time are really just two different expressions of the exact same force, well, that's going to be our guide as we go deeper and deeper. So here's the plan. First, we'll cover the basics in reading the tea leaves. Then we'll see how traders try to get a better signal in weighting the odds. After that, things get interesting. We enter Gann's world with the geometry of price, and then we go straight down the rabbit hole with decoding the cosmic vibration. And don't worry, we'll pull it all back to solid ground in the end with risk, reward, and reality. So what is this world of technical analysis for stepping into? Well, it all kicks off with one core promise. Here's the textbook definition. See, technical analysis couldn't care less about a company's sales, its earnings, or who the new CEO is. Nope, it ignores all of that. It is purely 100% the study of price and volume on a chart. That's it. It's all about looking for clues in the patterns to figure out where the price might be headed next. And this right here, this is the bedrock belief of the whole thing. The big idea is that human psychology, the collective fear and greed of millions of people, tends to create the same kinds of patterns over and over again. So if you believe that, then studying the past isn't just history, it's getting a little glimpse into the future. Okay, so just looking at price is one thing, but traders are always looking for an edge, right? They're always trying to build a better mousetrap. And one of the first tweaks they often make is to start paying serious attention to volume. So think about a classic tool, the simple moving average. It's just that, a simple average of prices over, say, 50 days. But what if not all days are created equal? That's the whole idea behind the volume-weighted moving average, or the VWMA. It gives way more importance to days when a ton of shares were traded. The theory is pretty simple. High-volume days just matter more. So you have to ask, does it actually work? Well, a big study back in 2013 in China's market put it to the test on over 2,000 stocks, and the results are kind of hard to ignore. On the left here, you can see the VWMA strategy just plain found more profitable stocks. And over on the right, the win rate for each individual trade was higher too. It seems like adding that one extra ingredient, volume, really did make a difference. And let's break down the actual numbers. The VWMA was more sensitive. It generated almost 7% more trading signals. It was also less risky. The average loss on a trade was over 17% smaller. And, of course, the big one, it was more profitable, kicking out a higher average annual return. So the takeaway is pretty clear. In this study, just by waiting for volume, they found a clear, measurable improvement. Now, improving on old tools is one thing, but what if the market isn't about averages at all? What if it's really about geometry? And this is where we finally meet the man, the myth, the legend, W.D. Gann. Gann's huge breakthrough was that he just stopped seeing price and time as two different things. To him, they were two sides of the same coin. So a Gann angle isn't just some random trend line. It's a line moving at a very specific speed, representing this perfect geometric relationship between how much the price moves and how much time passes. And the king of all these angles is the 1x1, which is just a perfect 45-degree angle. This line represents absolute equilibrium, a perfect balance. So when a stock's price is trending above this rising 45-degree line, it's considered super strong. But if it breaks below it, that's a major sign of weakness. For Gann, this wasn't just a line on a chart. It was like the market's center of gravity. All right, I hope you're ready because we've gone from averages to geometry. And now we're going from geometry to what Gann's followers call cosmic vibration. This is where we dive head first into the deepest part of the rabbit hole. This is the really wild idea. The theory basically says that every single stock or market vibrates at its own unique frequency. It suggests the market isn't some chaotic mass of human emotions, but that it's actually a predictable instrument playing a cosmic song. And if you can just find the key, you can decode its signature. And this is supposedly the key. I know, it looks like some cryptic line of code from a sci-fi movie. But to a true Gann believer, this formula is the secret decoder ring. It's the way you translate a simple stock price into a cosmic coordinate, a specific position on a 360-degree circle. Okay, so how on earth does this thing work? Let's break it down. First, you find the prime vibration by taking the square root of a really important price, like an all-time high. Then, you turn that into angular momentum by multiplying it by 180, half a circle. Step 3 is the most mysterious part. You apply a cosmic phase shift by subtracting 225. And finally, you use the modulus function to wrap the whole thing back into a 360-degree cycle, kind of like the face of a clock. And this is the absolute key to understanding this. The number you get from the formula, it's not a future price target. It's an angle. The theory says that when a stock's current price gives you an angle that has a special harmonic relationship with its past, like it's exactly 90 or 180 degrees away, then a major reversal is extremely likely. It's all about finding the timing, not the price. Okay, let's all take a collective breath and come back to planet Earth. We've gone from simple math all the way to cosmic frequencies. But how does any of this stuff actually help you in the real, messy world of trading? I mean, this is the real question, isn't it? Have we actually unlocked some hidden secret of the universe? Or are we just practicing a really, really complicated form of financial astrology? The skeptics have some pretty strong arguments. For one, this whole idea flies in the face of mainstream finance theory, the efficient market hypothesis, which basically says you can't predict the future from the past. Critics also say that picking where to start these Gann angles can be totally arbitrary. And hey, maybe it only works because so many people believe it works, a self-fulfilling prophecy. And at the end of the day, it's super open to an analyst's own personal bias. But here's the most important pivot of all. It doesn't matter if your trading system is based on planetary alignments or a simple moving average. There is one single principle that unites every profitable trader out there. And it has absolutely nothing to do with predicting the future. It's called risk management. And at the heart of risk management is a simple concept, the reward-to-risk ratio. A really common goal for traders is to only take trades where they can potentially make at least 3 times more than what they're risking. In other words, they're willing to risk $1 for a clear shot at making 3. This is the real holy grail of trading. It's not a perfect prediction system. It's an ironclad system for managing your risk. It's about not making emotional decisions. It's about being disciplined with your plan and your stop losses. Because here's the magic. With a good reward-to-risk ratio, you don't even have to be right all the time. In fact, you can be wrong more often than you're right and still be profitable. Think about that. So, in the end, what is the market? Is it a cosmic symphony playing out in perfect mathematical harmony? Or is it just the messy, predictable, yet totally irrational behavior of a crowd? The funny thing is, the answer might not even matter. Because the real secret to trading isn't predicting the future, it's managing the present by knowing exactly where you're getting out before you even get in.